How can I avoid high deed transfer taxes? Imagine turning a big expense into a smaller one just by knowing the right moves. When you transfer ownership of a property, the government often charges a deed transfer tax. This fee can add up quickly, especially on high-value properties. But there are ways to keep these costs in check. First, remember that transfer taxes usually only apply to real property, not personal property like furniture or equipment. If you can separate the value of personal assets from the real estate, you might reduce the taxable amount. For example, in commercial deals involving hotels or restaurants, properly documenting and allocating the value of furniture and fixtures can help. Before closing, consider commissioning a transfer tax reduction study. This is a special appraisal that clearly distinguishes real property from personal property and assigns accurate values. Doing this before the deal closes ensures you pay only on the real estate portion. Another strategy involves using legal entities like limited liability companies, corporations, or trusts. Transferring ownership through these entities can sometimes avoid or delay transfer taxes. For instance, placing property into a land trust or an irrevocable trust might help, but rules vary by location. It's essential to consult a legal expert familiar with local laws. Timing your sale can also make a difference. If the assessed value or sale price is lower during a market dip, your transfer tax could decrease. However, this approach requires balancing market conditions with your investment goals. Negotiating who pays the transfer tax is another option. In many deals, buyers and sellers can agree to split the cost or shift it entirely to the other side. This negotiation can improve your cash flow. Using a 1031 exchange is a popular method for deferring taxes. While mainly for capital gains, it can also help reduce immediate transfer tax exposure if you reinvest in new properties within strict IRS timelines. Lastly, knowing local laws is key. Some jurisdictions offer exemptions or reduced rates for certain transfers, like intra-family deals or transfers to government agencies. Researching these options can save you money. To sum up, understanding how transfer taxes work, planning ahead, and working with legal and tax professionals can help you avoid paying more than necessary. Proper documentation, strategic timing, and legal structures are your best tools to keep these costs low and maximize your investment returns.